All right. You guys know that the Fed pivoted, but I don't know that everybody really understands exactly what that means just yet. It means that he has moved from one problem to another. He's moved from thinking his biggest concern is inflation to now realizing that his biggest concern may be unemployment, which would lead to a major recession. So he has moved away from tightening and putting a brake on the economy to easing, trying to get things moving again and to stimulate corporations to hire and to grow. That's what the big pivot was. Now, the question is whether or not he was too late. Should he have pivoted in July? Was he wrong to have waited till September? Did he give a 50 basis point cut because he was scared of what he saw coming around the corner? Well, around the corner is this week. We've got 4 data reports on jobs and unemployment and payroll. And these are the things that the market's going to look at very carefully to assess whether the Fed has truly given us a soft landing or it's the tipping point for a huge recession and a slowing economy. Now, I'm going to give you my opinion today. And as I was reflecting on what I'm sharing with you today, I thought you guys are getting cynical Josh today. And I'm going to lay out for you why. But let's just go over which data reports we're waiting for. And then I'm going to explain to you why I think we may continue in a bullish trend by the end of this week. Now, you say, well, bullish, Josh? I mean, things are not looking that great. Aren't you scared? Yes, I have concerns. There's technical concerns in a lot of the charts. I've talked about them in the last couple of videos that I've made, but I'm going to give you my reason why there may be a catalyst or there may be a reason to trump all of those technical concerns. And we're going to fall back on the fact that it's an election year. Okay, so let's talk about the jobs reports that we're getting this week, and then I'll give you guys my opinion. Starting things off tomorrow at 10 a.m., we're getting the JOLTS report. That's the new job openings that occur each and every month. Now, following that on Wednesday, we get the ADP employment report that comes out pre-market at 8:15 Eastern Standard Time. And if you are a doubter of the employment reports that we're getting from the federal government, this is the one that would be the most interest to you. And then we've got jobless claims on Thursday at 8:30 a.m. This is the third jobs report that we've got this week, and this is going to be jobless claims. So people who are filing to receive unemployment, new unemployment claims this week. That's what we're going to be getting Thursday. But the big one that the market's really going to react upon, because this is the one that drives the data, is the non-farm payrolls that we get out Friday, October 4th. Now, in that report, jobs are actually expected to rise. We're actually expecting to see a tick up and an increase in jobs added to the economy. We're actually expecting to see unemployment rates stay flat. So we're not looking for a major change there. We're looking for that to hold steady. And then we're also going to get wage reports. Now, we can afford to lose some jobs. We can afford to not add jobs as long as the wage factor continues to show strength. Because even if some folks are unemployed, if the folks who are working can afford to keep this economy afloat and they're not afraid to spend money, well, then the economy stocks can continue to grow and can continue to go higher. Those are the things that we're watching for this week. And so why did I say I was cynical? Well, because is the data, besides the ADP report, how reliable is it? If the market makers and those who control and pull the strings in this country want to tell us that unemployment remained flat, well, they can tell us that this week, and they can cause the markets to rally. Matter of fact, if they wanted to come out and say that unemployment shrunk and people got jobs and there's new jobs coming on the market, they could fluff those numbers as well to push the economy pre the election, right? Now, if they don't like the candidate or they want to force a crash later, well, then they'll just revise the numbers, giving correct data to show that things have changed. And so I would say that, now forgive me if I've gotten too cynical for you guys, but I think it's just too easy this last stretch before the election to make those unemployment numbers reflect whatever it is that the market makers want them to reflect. Now, what that could be setting up for is the blow off top off of an incredible run and the elation that many people would be feeling seeing their portfolios rise, thinking to themselves, the sky is not falling in this economy, that things are okay, and maybe a major change isn't needed. And so all of that causes me to think that we might not be crashing this week. I'm leaning towards the fact that the numbers can be manipulated because we're in an election year and there's very powerful people that pull the strings in this country, and they're the ones who put people into office or take people out of office. So it's going to be very interesting to see how the market acts this week. I'm going to lean towards the idea that we're getting ready to set up for an incredible run, that all the employment data is going to come in the way the market makers want it to, and we could be setting up for the blow-off top that we've been slowly moving towards all of 2023 and 2024. Just my opinion. Now, having said all of that, I'm going in light until I get the data. I'm going in light until I see the market's reaction. I'm not trying to get ahead or in front of the train. I'm waiting for the train to stop. I will get on at my leisurely pace. I will take my seat, buckle myself in, order a drink, and I will take off to the next stop with it. I'm not going to try to jump on the fast-moving train. I'm going to wait until the market decides what it wants to do. That's how I see the markets today. I hope you guys found that interesting. I'd love to know how you see the markets. Let me know in the comments section. This is the Stocks with Josh show. I appreciate you guys. Hit the like, say hi in the comments. Watch out for scammers that pretend to be me. If something doesn't feel right, it probably isn't me. But if you want to connect with me more, you can do it in the Stocks with Josh Discord, the Chart Goat University, where we're doing a 3K to 10K challenge, and I'm dropping education pieces. We entered another trade today on Amazon, and this is one of the stocks that I'm going to talk to you guys about today. We're also keeping an eye on a number of other plays. And in addition to that, I've got to talk briefly about what's going on with crypto, because in my last video, I believe it was Friday, I warned that we were peaking and likely needed to cool off for a moment before going higher. Now, my bias is that we're going to scream higher on Bitcoin and crypto, and that we're getting just a momentary pullback to support so that we can go higher. I want to remind you guys that Bitcoin typically consolidates for 200 days and then it makes a major move. We've gotten there. We've done that. And now we're in the stage of getting a major move. Now, if you heeded my caution going into this weekend, you would have taken profits and you would have been selling at the top of your favorite cryptos and your favorite altcoins. I did, and locked in a ton of money. Now I'm anxious and eager to get back in, so I'm watching it very carefully. Guys, I'm going to shout out Ethereum because lately I've become more interested in Ethereum. It would take very little for Ethereum to take off like a rocket. I'm very interested in Ethereum right now, and I took a initial position, which I'm going to grow to 6 figures very soon. I'm giving everybody the heads up that I'm bullish on Ethereum right now. Now, I could be wrong. This is a risk position, but I think it's just beat down. And I think when something gets beat down like this and there's nothing wrong with the project and it's still sort of the backbone of a lot of cryptocurrencies, it's around that time that I begin to think, okay, well, it's something that I want to buy more of. So just wanted to throw that out there. Now, tomorrow I'm going to be having some folks on the show. We're going to do a live and a deeper dive, and we're going to chart some cryptos for you guys, so don't miss tomorrow's live. Okay, let's talk a little bit about earnings. We've got an earnings tomorrow before the market opens, and it's Nike. And I'm just going to come right out and tell you guys that I don't love it. I would have called it as an earnings play, at least a lotto play, small position size, because it has been beat down, and that means that the options could be pretty profitable. I didn't. I took the time to analyze Nike, and I just came across too many people that understand the fundamentals of Nike better than me, and they more or less said that it's going to take years for them to recover. So it's come up off of its lows. It came up off of its lows. There's room for it to continue to fall, so I'm not touching Nike for tomorrow. Now, many analysts have maintained their price target on Nike at $85, and it's currently trading at $88. And so that's not a good setup going into earnings. So what I'm going to be doing is I'm going to be watching the earnings, because if it doesn't go well, then I think there's going to be more opportunity to potentially short Nike. Now, I could be wrong. Let's see how Nike goes tomorrow. If you're in Nike, if you're long Nike, I wish you the best. I hope it takes off like a rocket and you make hundreds of % on your investments and trades. Okay, let's talk about the trade that I am interested in right now, and that's Amazon and Tesla and NVIDIA. I actually like a lot of big tech right now. I also like Meta, but the ones that I'm most interested in right now that are new positions for me, so positions that I'm currently adding to or growing, are Amazon and NVIDIA. Tesla, I've got my bags packed. Meta, I bought a couple weeks ago, and so I'm more interested right now in Amazon and NVIDIA. And today we're going to be specifically talking about Amazon and what I like about the charts. Now, we are seeing some FUD in the news, but there's a number of companies that came out and have maintained Amazon as a buy and given it a higher price target of around $265 is one of the higher price targets that Trust Securities gave it today. Cantor Fitzgerald maintained their $230 price target and maintained them as a buy. So I think that there are interesting negative news stories circulating Amazon right now. One of them is the potential strike at the ports, which could cause disruption to goods coming into the holiday season and obviously affect Amazon's profitability. But at the moment, the chart is setting up that if we get a good jobs data this week, I think Amazon could rip. It already had a massive dip. So there was already this moment of profit taking, and we might actually be making another wave higher all the way above 200. Let me show you that chart real quick. Okay, here's how we're set up right now. And in some cases, you would look at this MACD and see that it's rolling over, and it would be a pretty bad warning sign that this could actually be the beginning of a breakdown, right, in momentum, similar to what we saw here. Once we had a cross under on the MACD there, it led to this huge price fall, right? And so right off the bat, we're looking at the daily time frame. You know, you might say, Josh, you got to be crazy to be interested in Amazon. Well, let's go through a couple things that are just a little bit different right now than they were when we got this other crossover. First off, I've traded the MACD for a long time, and you can see that the MACD can just continue to come along and bounce off of this line and go higher and higher, right? So we don't know that we're going to get this crossover just yet. Second of all, it's very consistent that we get these channels that eventually get broken. Let me just kind of take you over to this one. The last time we had this major price breakdown, we actually had two patterns that were warning us. One was this ascending wedge, which was very bearish, that preceded this move here. The second was this ascending channel, which preceded this gap down and move here. Well, so even if we're going to go lower, in my mind, we've got to actually go higher before we do that. And I could easily see us getting back to 190 and creating this ascending wedge before going lower if that's ultimately what the stock wants to do. But there's also the opportunity of a potential bounce here. I do believe that if we can find support at the moment here at this 184.40, I believe there's actually opportunity for us to move all the way up to this 205 and even touch the top of this ascending resistance line, putting the stock between 205 and 208. And this is sort of the blow off top that I'm looking for in Amazon. Now, if we shift from this daily view to this weekly view, I want to point out that the story changes a little bit. And what you see is that on the weekly time frame, we're setting up for a potential bullish crossover, and we're still in bull territory, and we have been for a very long time. And so if we get this crossover on the weekly, which is sort of bent down a little bit, and that's why we're seeing that problem on the daily. But if this actually begins to move up based on good catalysts leading us into our last phase before the election, this could actually be the blow off top. This crossover on the signal line is actually, when we got this in the past, it actually is what led to this monumental move up in price, and we could be getting ready to get the exact same thing. Later on, we could see this head and shoulders play out of momentum. But if we got that crossover on the weekly, we would absolutely get to 205 or 208 or even much higher. You know, as I reflect back on the last quarter, I have given extremely clear and accurate guidance on some very big plays. And I've reminded you that it's the big plays that are well thought out with your highest amount of capital that ultimately will be your largest winners, not your scalp trades that you do in the morning. Okay, those are typically just going to be picking up little pieces along the way, building small amounts of money over the course of time. It's your big plays that are going to be the most profitable. Now, we have called on this channel NVIDIA perfectly, ran it all the way up, and then when it came down and people were saying the run-up was over, called it a buy again, we ran up again. We've done the exact same thing with Tesla, and people were selling at 240, 248, 255, and 261. And I kept telling them, hold on, pump the brakes on selling Tesla, okay, because we have a great catalyst ahead of us. We're moving into an environment that could be a secondary catalyst, good data with an easing Fed, right? Sort of a Goldilocks environment. And Tesla's not breaking down. Who told you that Tesla wouldn't break down? I told you that Tesla wouldn't break down. Let's go look at the charts because this could be setting up for a move that people are not expecting. And I don't want you guys to come tardy to the party. I don't want you to ask me, should I get in it, you know, after the moves occurred? That's when everybody on the news is going to be pumping it up. Now, I'm not advocating not using a stop loss. One of my disciplines is to have a stop loss, and I've got a stop loss set right now on all of these plays that I'm talking to you about. And I take profit. I told you about taking profit with Bitcoin, even when it's hard to do, but not taking profit just yet on Tesla. Let's go look at that chart. Okay, we've talked about this. Talked about it way back here. Cup and handle, okay? Now, we're right at the line of getting above this cup and handle. The cup and handle price is around 261. We still have time ahead of us. But here's the point I want to make today, and I've been making this point. I'm just going to make it again. You take the low of the cup, okay, to the neckline, and you place that at the potential breakout zone, and that tells you where the stock could possibly go. And the number I just want you guys to be aware of is back to 380. If we actually got a confirmation of a breakout of this cup and handle, and we got that above this 261, so the price explodes, even if we consolidate here for a little while, it's ultimately telling us that Tesla's entered into a new phase with a potential price target of 380. And let me talk to you about why that's so significant. Let's jump to the weekly candles, because it's actually pointing potentially to a total and complete price reversal, taking us back to all-time highs. That's why it's interesting. Now, do we know that's going to happen? No, we don't know that. But if you're ever going to take risk on Tesla, to be honest with you, it would have been in this last 30, 60, 90 days, because Tesla has been slowly building back its momentum to a potential breakout back to all-time highs. Tesla has been the worst performing big tech company, but it's potentially getting ready to catch up with its peers, or at least we're at the deciding line. And so I'm definitely going to be holding Tesla and not selling it in any form of a panic until I see what it does with this cup line and this historic line of resistance. Again, love to hear from you guys in the comment section if you are not touching Tesla. Even NIO has come back to life. Even NIO's hitting the radar of interest. Now, I'm not buying any NIO because I like to be in the best performing stock in a sector, and I personally believe that for EVs, that's Tesla. But if you've made some money this week on NIO, let me know in the chat. Let me know in the comment section if you're getting excited about being a NIO holder again. I'm excited about holding Tesla for now. All right, guys, that wraps it up for me today. Hit me up over in the Stocks with Josh Discord. Come join us over there. It's not just me. It's me and the Crowned Traders. There's a number of very talented investors Over there, you can come trade with us. You can learn to chart, and you can be in a great positive community each and every day. I'll leave a link in the top pinned comment. Peace and blessings. Hit the like and the subscribe. Let's see what these markets do this week.